Hello, this is Silvia Pavoni, Investments Editor of the Bank, reporting from the International Monetary Fund's annual meeting in Washington. I've just spoken to Chile's Finance Minister Felipe Larraín, and here are the highlights.
Maybe some of you know, a couple of weeks ago we came to New York and we issued a bond, a dual bond, like we did last year, and we raised $1 billion in dollars and $350 million in pesos. The $1 billion in dollars was at 335, which is the lowest rate in our history. And as far as I know, and it was confirmed by people in Wall Street, it was the lowest rate of any Latin American issuer in history. So we were happy with the terms, and probably it will try to go today or this week. After what we did, it would have been very difficult, and most likely in the peso tranche, because the peso is more complicated with the volatility of exchange rates these days. So we don't know what's exactly going to happen in the world economy. We have our own view, but we are having a contingency plan to do what is necessary if things get worse. Like insurance policy, a contingency plan is something that we wouldn't like to use, but if necessary we will use. And I think that one thing that differentiates the Chilean economy is that we have room of maneuver, both in fiscal and monetary policy. We have a level of government debt to GDP is 9%. That's the gross debt. The net debt is minus 7.5% of GDP. We have more public assets than liabilities. So we are net creditors to the rest of the world. And if we would go to markets, it's because, first of all, we committed to come back, and we did, and because it was a good opportunity to get funding in a complicated international situation where liquidity will be at a premium if things get worse. So it's part of our contingency plan, and also to provide a benchmark for companies. We will have a fiscal surplus this year. The economy will grow around 6.5%. And of course, there will be a deceleration next year. How far the deceleration will go, we don't know. But it depends on how the world economy reacts. And I think it's time. We emerging markets are part of the solution right now, mainly Latin America and Asia, but other emerging markets as well. And the problem now lies in the developed world, and it's the responsibility of governments, particularly in Europe, but also in the US, to act, and act decisively. It is not time for half measures.
So you feel that the measures that have been put forward at the moment are far behind from where they should have been?
Clearly in the case of Europe. Mm-hmm. Clearly in the case of Europe, because first of all, I think here it has to be a very clear divide between the situation of countries which are very complicated and to avoid contagion of some of the core economies. And I think that hasn't happened so far. The measures that have been taken have not been so decisive as the necessary measures. And by necessary measures, I think you have to make a clear distinction of which countries are insolvent, or those that have a liquidity problem, and then those that have a liquidity problem need the support of the ECE or ECB. And the full support of the ECB, and I think that's the half measures that I say, because there's limited support, and then there is of course the need for countries to make reforms, but there is need the countries by themselves. If you have a market with the level of uncertainty that you see right now, a country by itself, cannot really solve the problem all by itself. So it needs the concerted approach and a much more clear decision at the central level. And I think that's been the problem with Europe, and Europe really needs to get behind the countries that have liquidity problems but are solvent, and to help in the restructuring of debt when countries are insolvent. And of course the issue of solvency is also the level of interest rate, because maybe at 4% interest rates you can be solvent, but if you have to pay 8%, then you're insolvent. And what is the difference between 8 and 4? Well, it's the credibility that you have with the people that are going to be funding you. And that's where a very decisive role of an institution like the ECB happens.
So clearly Chile has a cushion to react to any external problems, but what would be the repercussions of a European situation that is getting worse on the Chilean economy?
Well, if I take at face value the projections of the IMF World Economic Outlook, I would be fine. I would sign immediately for those. You know, that means Europe growing at 1.5, the US growing at close to 2. Well, that is not the desirable situation for the world, but that's a situation we can live with. But things can get worse than that. So I would say that there is significantly downside risk to the world economic outlook projections, particularly for Europe. Particularly for Europe, because I think for the rest of the country. But of course, if things turn worse in Europe, then it's going to be repercussions. We cannot. I'd like to stress that as much as we have a strong position in Chile and several emerging markets, we are not isolated. We're not bulletproof. We're not immune to what happens in the world economy. We're in this together. Some countries have better ways to react, and we have room of maneuver both in monetary and fiscal policy, not just in fiscal policy. We have our monetary policy rate at 5.25 right now, and you know the fiscal policy I just described the situation. So we have ample room to react. But you know, reacting is one thing. We hope that we don't have to react. You know, we hope we don't have to use the contingency plan. We hope that you know, the European problem will be resolved. It won't be resolved in a painless way, but it needs to be resolved. Otherwise, the results will be much worse.
Can I just ask you briefly, what do you think about some suggestions of a BRIC rescue package for Europe?
Suggestions for a rescue package for Europe?
From the BRIC countries.
Is that a question? Yeah.
I haven't looked in detail at those.
But in theory, just your first thoughts, would it make sense to have the BRIC countries funding the European?
Well, if the BRIC countries want to do that, I think it would be welcome. You know, it's up to them, and it's their own free will to do it. There are two ways to cooperate. Well, you can cooperate with ideas, or you can cooperate with money, or you can do both. You know, and in this particular case, I think it was money that was being. But I think the level of the effort is considerably big. If you put a few $1 billion there, well, it's always welcome, but that won't solve the problem. You know, we're talking in the hundreds of billions here, in order to have something sensible. And I think the only institution that can really is a full decision of the ECB to stand behind countries' sovereign debts that of solvent countries.